You know, in a market that is just gripped by fear right now, one of the world's most watched investors is making some incredibly bold, multi-million-dollar bets all on a single technology.
And I mean bold. In just one day, Cathie Wood's ARK Invest poured nearly $12 million into a single AI-adjacent software company called Figma. And they did this even as the whole sector was tumbling. It's a move that, on the surface, looks super aggressive, almost crazy given the economic climate.
So that begs the question, right? What does she see that maybe the rest of us don't? Okay, let's dive into this. Because by the end of this explainer, we are going to break down the exact four-step playbook that's driving these massive investments.
To really get what Cathie Wood is doing, first we have to understand the problem she's trying to solve. And right now, the market is sending completely contradictory signals. It's making it nearly impossible for investors to figure out which way is up.
I mean, on one hand, you've got things like rising bankruptcies, which screams slowdown. But on the other hand, there are these really confusing differences between big economic yardsticks like GDP and GDI. Then you throw in the constant "what's the Fed going to do next" game, and honestly, you've got a recipe for total paralysis.
And this right here perfectly illustrates the fear, a deeply inverted yield curve. Now, historically, this is one of the most reliable red flags for an economic downturn. It basically means investors are so worried about what's coming soon, they're willing to get paid less just for some safety down the road. And you'd think, okay, maybe the high-flying tech world would be safe from all this, right? Nope, not at all. Even the software sector, which has been a growth engine for years, is seeing some extreme ups and downs. The ground feels shaky pretty much everywhere you look. This is how fragile things are. Get this. Recently, a single, pretty speculative blog post, one that was described as dystopian, was enough to cause a huge sell-off in software stocks. That's the level of anxiety we're talking about here. It's a market that is absolutely running on fear. So, in the middle of all this chaos, how on earth do you make confident, multi-million-dollar investments? Well, you find an anchor, a core belief, something that cuts right through all that noise. And for ARK Invest, that anchor is artificial intelligence.
This quote from Cathie Wood herself is everything. This is the key. For her, this isn't just about the next hot trend. It's a deep conviction that AI is a fundamental, history-altering force. And this one belief is the lens they're using to make every single investment decision.
Okay, so let's see how that conviction translates into actual dollars. We're not talking about small speculative buys here. We're talking about a clear, aggressive pattern of investment that goes across the entire AI ecosystem. To take a look at this breakdown of their recent moves, you can see they're betting on AI-powered software with Figma, the underlying cloud infrastructure with a company called CoreWeave, the essential hardware with AMD, and even AI-powered logistics with DoorDash. It's a really comprehensive strategy. So, first up, you've got the software layer. ARK has poured over $24 million into Figma. This is a company that's not just sprinkling AI on top, they're integrating it at its core, helping designers turn simple text into actual working app designs. It's really a bet on AI making the act of creation itself way more efficient. But of course, great software needs powerful infrastructure to run on. And that's where the nearly $16 million investment in CoreWeave comes into play. These guys build the specialized high-performance cloud systems that are absolutely crucial for training those massive AI models that power everything. Think of it as a bet on the picks and shovels in the AI gold rush. And if you go down another layer, you get to the actual physical hardware. The strategy also includes a multi-million-dollar bet on AMD, a key company that's making the powerful chips that are basically the brains of every AI data center. So you see, it's a complete stack, software, infrastructure, all the way down to the silicon itself.
And finally, we have a really interesting one, a $5.4 million investment into DoorDash. Now, you might just think of them as a food delivery app, but Cathie Wood specifically points to them as a perfect example of a company using AI to totally transform its business. And believe it or not, this company is the key to understanding the entire playbook.
Which brings us to the moment we've been building towards. We've seen the chaotic market, we've seen the big AI bets. Now, let's finally close that loop and reveal the specific strategic thinking that ties all of this together.
So what is this secret playbook that makes these investments seem not just bold, but actually logical, even in a market this crazy? Well, it's actually a surprisingly simple four-step cycle. Here it is. Step 1. A company like DoorDash aggressively uses AI to optimize pretty much everything. Step 2. All that new efficiency dramatically lowers their operating costs. Step 3, and this is key, they pass those savings on to their customers by reducing prices. And that leads to the crucial final step, step 4. Those lower prices stimulate a surprising surge in demand and growth, which creates this powerful self-reinforcing flywheel.
And that right there is the core insight of this entire strategy. It's not about ignoring the fear in the market. It's about betting that this AI-driven growth cycle is so powerful, so deflationary, and so disruptive that the companies who master it will win despite whatever the broader economy is doing.
It's a pretty powerful thesis that completely reframes how you might think about investing right now, which leads me to our question of the day. Beyond the huge names like NVIDIA and Microsoft, the Magnificent Seven, what under-the-radar company do you think is best positioned to win with AI? Let me know what you think in the comments below.